Hi everyone, I'm Raj from EPK Capital. If you're watching this, there's a good chance you've hit a significant milestone in your financial journey, reaching that $1 million mark. Reaching this level of wealth isn't just about the number, it's about the freedom it represents. But here is the hard truth: what got you here won't necessarily get you to the next level. At EPK Capital, we've spent over 2 decades helping families build wealth that lasts for generations. And what I've noticed is that when you cross the $1 million threshold, your retail investment strategy starts to break. Those mutual funds and fixed deposits that served you well in your 30s, they might actually be holding you back now. Today, I want to take you behind the curtain of how HNIs actually structure their portfolios. We're going to look at PMS, AIFs, and strategic bond ladders. This isn't just about beating the market, it's about building a fortress around your legacy. Let's start with why we need to pivot. When you have a few lakhs to invest, a standard mutual fund is a great tool. But when you're managing 10 crores, the retail approach has two major flaws: lack of alpha and lack of control. Most large mutual funds are so big they become the market. They have to hold too many stocks because they have too much cash to deploy. This leads to closet indexing. You're paying high fees just to get the same returns as the Nifty 50. At the $1 million level, you need alpha, returns that significantly outperform the benchmark. You also need custom risk mitigation. An HNI portfolio is designed to be more resilient when the market drops. We shift from buying products to crafting a strategy. This is where we stop following the crowd and lead our own financial destiny. The first tool in the HNI shed is often a PMS, or Portfolio Management Service. Think of this as customized craftsmanship. Unlike a mutual fund, in a PMS, you actually own the individual stocks in your own demat account. This offers transparency and concentration. In a PMS, we can be much more selective. We might only hold 15 to 20 high conviction companies with strong moats. Because the portfolio is concentrated, these stocks move the needle for your wealth much more than a diluted fund would. Plus, you can see exactly what you own every single day. There's no black box. It aligns specifically with your risk appetite. It's about owning a piece of India's growth story, not just a ticker symbol. Now, before we move on, I have created an in-depth guide to the 7 costly tax traps for high net worth NRIs. You can download it simply by clicking on the link in the description. Let's continue now. Now, let's talk about something that creates real excitement: alternative investment funds, or AIFs. This is the new frontier. In India, AIFs offer access to things you simply cannot find on the stock exchange. Category 1 covers venture capital. Category 1 is about investing in the next big Indian unicorn before it goes public. Category 2 is private equity. This provides high-yield debt to developers or stakes in private companies. Category 3 includes long-short funds. Hedge funds can actually make money even when the market is falling by shorting stocks. This is about decorrelation. It ensures your entire net worth isn't tied to the daily mood swings of the stock market. It's about exclusivity and accessing institutional-grade opportunities. While we all love growth, wealth management at the $1 million level is equally about protection and cash flow. This is where the bond ladder comes in. Imagine a ladder where each rung is a bond that matures at a different time. This ensures you always have liquidity coming in. We look for AAA rated corporate papers or sovereign gold bonds. This creates a perpetual income engine for your lifestyle. It pays for your lifestyle, allowing your equity investments to stay invested and compound over decades without being touched. One of the biggest mistakes I see in India is home bias. People have 100% of their wealth in rupees. Over the long term, the rupee has historically depreciated against the dollar. If your children study abroad, you are exposed to currency risk. Through the liberalized remittance scheme, we help our clients invest up to $250,000 per person per year into global assets. Whether it's US tech giants or global REITs, having a dollar-denominated portion of your portfolio is a critical safety net for your wealth. Let's talk about the silent killer of wealth, taxes. It's not about what you make, it's about what you keep. At the $1 million level, your tax structure is as important as your investment pick. If you churn stocks personally, you lose chunks to taxes. We look at structuring. For some, that means a family office. For others, specific AIF structures that are more tax efficient. A 2% improvement in tax efficiency over 20 years can mean the difference of several crores in your final legacy. It's the most impactful part. Finally, we come to the core of what we do at EPK Capital, the generational mindset. There's a saying that wealth disappears in the third generation. Our goal is to break that cycle. Transitioning from getting rich to staying rich requires a change in psychology. It's about asset allocation. At EPK Capital, we don't just look at your balance sheet, we look at your family's future. We build portfolios robust enough to survive market crashes. We aren't just managing money, we are stewarding a legacy. We build portfolios that survive geopolitical shifts and the passage of time. We've covered a lot today, from the limits of retail investing to the power of PMS, AIFs, and global diversification. I want you to ask yourself, is your current portfolio structured for where you are now? Or is it still stuck in the strategy that got you here years ago? If you feel like your portfolio might be leaking, let's have a conversation. At EPK Capital, we offer a portfolio health audit for HNI families. There's no sales pitch, just a high-level discussion. Visit our website or click the link in the description to get in touch. I'm Raj from EPK Capital. We build wealth for generations. Thank you for watching, and I'll see you in the next one.